Chang in San Francisco, and this is Bloomberg Technology. Coming up this hour, tech earnings march on. I'll talk to the CEOs of Doordash, Airbnb, and Salesforce about the company's latest earnings report and where growth is expected. Plus, Bitcoin sell-off. The cryptocurrency heads for its worst weekly drop since March. Is it the start of a bubble bursting? We'll dig in. And DraftKings on a tear, shares more than tripling in 2020. CEO Jason Robins was one of the first to take his company public via SPAC last year. He said when he suggested it, people thought he was crazy. We'll talk to him about the ensuing SPAC craze. All those stories in a moment, but first, U.S. tech stocks rebounding as the global bond rout eased today. I want to get to Ed Ludlow, who's got the full picture for us. Ed, walk us through this Friday.
Yeah, it's been a tumultuous week in financial markets. So we got a bit of a reprieve, a bit of green on Friday, which was kind of nice. It's been a very long week, Emily, as you know. The S&P 500, the main gauge of US equities, down by 0.5%, so still lower, and actually had a weekly decline of 2.5%. But you can see there, technology stocks did rebound. The NASDAQ 100, which is a very tech-heavy gauge, up by 0.6%. The NYSE FANG Plus index had been higher, surrendered some of its gains, up by just 0.1%. And again, a continuing theme that we're monitoring all the time is the outperformance of semiconductor stocks. The Philadelphia Semiconductor Index up by 2.2%. The backdrop, of course, being this global shortage of semiconductors. In terms of some of the specific names that were driving that tech rebound today, Apple higher by 0.2%, Microsoft 1.5%, Amazon 1.2%, Facebook 1.2% as well. And these are the names that have been a concern for investors in recent days and weeks because of their high and lofty valuations. As yields have been rising, there's been a question mark over big cap tech stocks who have been some of the main beneficiaries of the pandemic. But as you can see, a reprieve, a rebound on Friday. But I want to kind of look at the bigger picture here in the week as a whole, because if you look at the NASDAQ 100 and NYSE FANG Plus index, it was a pretty bruising week. The NASDAQ 100 index having its worst week since October. The NYSE FANG Plus index, that gauge of big cap tech stocks, having its worst week since March 2020, almost a year. So still a lot for investors to digest in terms of an economic recovery, rising yields, what the potential is for an economic stimulus and the vaccine rollout. But at least we can take a little pause and a sigh of relief this Friday, Emily.
Ed, it wouldn't be Friday or, well, basically any day if we didn't talk about Bitcoin today. Another down day. Talk to us about the moves this week. We had negative comments from Bill Gates, negative comments from Treasury Secretary Janet Yellen, and yet some executives out there saying this is the future.
Yeah, so Bitcoin trading at around $46,000. As you said in the intro, on track for its worst week in a long time. And the rally that we saw in Bitcoin was driven by a lot of corporates, Tesla, MicroStrategy, buying into the cryptocurrency, giving it some validity. We've had names from big institutional investors in the past talk about it as a real asset, something that you could see serious investors go into. But at the end of the day, look at that chart. Down almost 18% for the week. And that's kind of where we're at. The volatility that we've seen in risk assets, including in equities, has kind of touched Bitcoin. The mania has cooled off. And as equities and stocks have dropped, so too has Bitcoin. If you look at futures as well, things might not get better. It looks like March could be a pretty rough month for Bitcoin as well, if you look at some of the futures action that's going on. I know you're going to dig into that in just a moment, but as you've said, a lot of commentary around this. Bill Gates this week, Elon Musk continuing to tweet about it. The bottom line, this is still an incredibly volatile asset, and it can swing, and I am struggling to keep track of it on a day-to-day basis, let's be honest.
Well, thank you for doing your best. Bloomberg's Ed Ludlow, appreciate that roundup. As Ed said, we're sticking with Bitcoin now. I want to bring in our cross-asset reporter, Katie Greifeld, who's also had an up and down week with the ups and downs of Bitcoin. Katie, any more additional insights to what Ed said there about what really drove this tough week?
Well, I'll add that for all the talk of Bitcoin being digital gold, it tends to be correlated with stocks. And as we just heard from Ed, it was a rough week for the stock market and for risk assets in general. And when we see the kind of cross asset de-risking that we saw this week, it tends to be the most speculative parts of the market hit first. And Bitcoin absolutely falls into that category. But unlike a stock, of course, Bitcoin doesn't have any fundamentals or cash flows. So it tends to trade off of momentum. And as a result, when you get big losses, that price action can kind of feed on itself. And we saw that today because even with tech stocks bouncing back a little bit, Bitcoin just wasn't able to stop its slide. And it fell another 4% today.
Well, it's interesting. I recently spoke with the CEO of MasterCard. They're considering digital currency, but talked about how unreliable the price of Bitcoin is. And I wonder if this is not something we should consider as a store of value, and if that will prevent it from getting more mainstream appeal.
Well, it's definitely a risky asset. And if you compare it to other stores of value, such as gold, the 30-day implied volatility of Bitcoin is about 6 times higher than the price of gold. So you have that to contend with. And then you have weeks like this week where Bitcoin was no store of value. And I mean, you hear crypto advocates pitch Bitcoin as digital gold. We heard from Kathy Wood of ARK Investments this week at the Bloomberg Crypto Summit saying that Bitcoin could replace bonds in 60-40 portfolios eventually. But the price action this week, again, it was really just a reminder that Bitcoin trades like a risk asset, like a speculative asset. And when traders were ducking for cover this week, it wasn't into Bitcoin. To be fair, it wasn't into gold either. Gold had a rough week. But you did see more traditional safe haven assets like the U.S. dollar rally, for example, while Bitcoin really wasn't much of a hedge for you this week.
So what are you expecting next week, Katie?
Well, thankfully, I'm off next week, but I'll be watching from afar. I mean, it really depends on the direction of stocks, I would say, and tech stocks in particular. And I mean, speaking to investors in the market today and throughout this week, again, even though tech had a little bit of a reprieve today, it seems like there's just a lot of headwinds gathering. When you think about the Treasury market, the direction of yields seems to be higher. That's going to make it harder to look at the valuations on some of those momentum, growth-heavy tech names and say that this looks reasonable because, again, it just gets harder to justify those valuations as yields continue to go up. And I would expect that to hit Bitcoin as well.
All right. Bloomberg's Katie Greifeld. Enjoy your week off. We will do our best to hold down the fort and Bitcoin, especially while you're gone. Thank you. Okay, coming up, DoorDash revenue beats estimates, but growth may slow as we come out of the pandemic. We'll hear more from CEO Tony Xu about delivery fee caps, investments, and more. Next, this is Bloomberg. We have some breaking news now. An FDA panel of outside advisors has officially said the Johnson & Johnson COVID vaccine benefits outweigh the risks. Johnson & Johnson shares rising right now after hours on the back of this news. The FDA usually follows the recommendations of this panel of outside advisors. That means they could authorize the shot officially within days. It could be available any day. Huge news, huge progress potentially in the vaccine rollout. We'll continue to cover this as headlines roll in. But again, FDA advisors saying the Johnson & Johnson COVID vaccine, good to go. All right, meantime, DoorDash reporting fourth quarter revenue that beat estimates, but losses doubling. The benefits it saw from the pandemic may start to fade as restaurants start to reopen and vaccines roll out. I got more insight from DoorDash CEO Tony Xu.
I wish that we could be doing this in person right now and that the vaccines were already here where all of us would be fully vaccinated. And, I think part of what you see in the guidance or reflected in the guidance is, a perspective of what might happen, post-pandemic. And for us, really, no one has a crystal ball. Our business had been growing, certainly was growing, even as some of the markets inside the U.S. had been reopening. States like Texas, Georgia, Florida reopened fairly aggressively in the May-June time period of 2020, and our business continued to grow then. But we really don't have any more data than that. And so, for us, it's being prepared for all of the scenarios. But over the long term, I tend to believe that these habits from consumers are very, very sticky once they become habituated towards convenience.
Now, you do own now the majority of the U.S. market, but you've got competitors like Uber Eats, like Grubhub. They are doubling down. What is your path to profitability as you also fend off the competition?
Yeah, well, for DoorDash, it's always been a focus on building the best customer across all of our audiences. And if you look at, the performance of the company, I think you saw a lot of the growth certainly on the top line as we've extended our market leadership, but you also saw a lot of improvements towards the cost structure as really, we've grown our scale. All of our fixed and variable costs as a percentage of our top line have come down. And I think what you're really seeing is the growing capital efficiency in the business as we continue to further invest.
So on that note, I'm full disclosure, a big DoorDash customer. Great customer service. If there's something not right, a missing item, something incorrect, you can get a refund or a credit right away. It keeps me coming back, but I wonder, how much is that costing you in terms of leakage? Is that like a big line item?
Well, this is, perfecting the service of making sure that we have zero defects is really, what DoorDash is all about. Operating at the lowest level of detail to make sure that every item is accurate, that every delivery is on time, that every item that might be out of stock is actually, given to you with a substitute that is adequate. I mean, those are all the things that we have to get right. And so for us, that is always going to be the perennial challenge. And it's what we focus the company on. And I think it's that maniacal drive of driving down our defect rates that you're starting to see some of these improvements in our cost structure. And these are all the costs that we bear, on behalf of all of the merchants on the platform, as well as the Dashers.
Now, more and more jurisdictions are putting price controls on the commissions that you can charge restaurants. How concerned are you that these are going to last and really cut into your margins?
Yeah, look, we believe that the price controls that you've seen are temporary. And I mean, candidly, we believe they're bad policy, as they usually achieve the opposite of their intended desire. And in fact, they'll decrease revenues and actually create less earnings opportunities for Dashers. I mean, if you think about the purpose of DoorDash, it is to grow and to transform these brick and mortar businesses so that they can compete. So measuring the profitability that we deliver for the merchants, I mean, that is really our North Star. That's why I'm super proud of the fact that all of the efforts that we took during the pandemic and even currently and beyond have made merchants on DoorDash 8 times more likely to have survived this pandemic than otherwise. And so, we have a set of products, one half of which are our marketplace, in which we're investing billions of dollars for the delivery, billions of dollars towards marketing to bring incremental demand to merchants. And then on the other side, we're giving merchants the tools to build their own digital channels commission-free through DoorDash Drive as well as DoorDash Storefront.
Right. Uber is now your biggest competitor by market share. I talked to Dara after their earnings report. They just did that Drizzly acquisition, but he said, we're done with acquisitions. We're doubling down on our organic growth. We're doubling down on grocery. What are going to be your biggest growth drivers of the future? You've got the convenience store vertical, which is sort of a nod to the future, but what's the next chapter?
Yeah, if you look at what DoorDash is working on, I mean, we're really working on 4 things. First is really extending our market leadership in our core category of restaurants, which we believe has massive runway ahead of it. Extending that leadership position in the US, as well as doubling down on some of our strong international performance where we're gaining share and improving profitability, is certainly one big pillar. The second, you mentioned it in the question, is we're extending this platform to other categories. In fact, in less than a year, according to third-party estimates, DoorDash is now also the largest delivery platform in the US for convenience items. And so I think you're starting to see some of the extensibility of our platform into some of these other categories. Third, we're continuing to invest in products like DoorDash Drive, Storefront, and inventing new products and services so that merchants can have the same digital products to create their digital businesses as we do for our marketplace. And fourth, we're growing our international presence.
Any plans to invest in Bitcoin, Tony? Every executive seems to be having to make a decision about that, or take Bitcoin as a form of payment.
We're certainly more operators than we are investors at DoorDash, although obviously we are also investors of capital as we allocate capital towards projects. No intentions at this point to invest in Bitcoin, but we're following closely what's happening.
What about as a form of payment? Would you accept it?
That's something that we're considering, but no news to be made on that point today.
All right, so last question. Look, Prop 22 has passed. You spent a lot to pass that in California to make sure that your Dashers could still be treated as contractors. It does mean you're going to have to pay them a little bit more in benefits, but I know this was really important to you. Is it going to be complicated to roll this out? How does this affect the company's future?
Yeah, we're very excited about Prop 22. I mean, in fact, it's already been rolled out. It was rolled out late Q4 around December, and it's had astounding impact. And it's one of the few policies I've seen where the outcomes actually achieve the intended objectives, which really were to give the Dashers, the workers, the flexibility that they've told us over and again that they prefer, and pair it with protections that we believe they deserve. I mean, we're super thrilled that the voters in California on both sides of the aisle overwhelmingly supported the Dashers in this regard. And so when you look at some of the results, Dasher earnings are up, like you said. Dashers in California, in the Bay Area, they're earning $35 an hour, including tips. In San Diego, $32 an hour, including tips when they're on the app. And Dasher net promoter scores have risen 50% after passing Prop 22. So it's been a huge win all around, in which we're giving Dashers the flexibility that they prefer, and we're pairing it with portable and proportionate benefits.
DoorDash CEO Tony Xu there. You can watch the full interview at Bloomberg.com. All right, coming up, crypto exchange Coinbase files for a direct listing. We have all the details next. This is Bloomberg. In terms of users, some people still come to Twitter. They're a little confused. It takes time to figure out who to follow. How do you improve that from a product perspective to get to 1 billion?
Yeah, I think that one of the fascinating things about Twitter is that once you get it, it becomes indispensable to you. You know, I just talked to a few people this morning who said, I get up every morning, it's the first thing I do, and it's an absolutely indispensable companion to the live experience for me.
Someone suggested a joint venture with Amazon. Would that ever happen?
Oh, really? I heard about it from you. I have never heard about that. But I would be interested in talking, because as always, anybody that involving helping small business, we will feel excited.
Jack, a lot of people are looking at Square as an example that these private tech unicorns are overvalued. What do you think?
I don't know. I'm not an economist. We have an economist on our board, Larry Summers, so you should talk to him.
But you've compared the company to Amazon. You've got some investors out there who think it might be more like an eBay. There are just big questions about how big the ride-hailing market can be. How do you deliver on the Amazon promise?
Well, we just have to, we've got to execute. And when you think about what Amazon did, they went beyond a bookseller to other categories of retail. We're doing the same thing. And I think that the ones who bet on us, the investors who bet on us, long term, are going to be happy.
Those are just some of the CEOs I've had the opportunity to speak with over the course of 10 years at Bloomberg Technology, hard to believe. And we are planning a special show to mark a decade of our coverage on Monday. Join me along with some of Silicon Valley's most insiders I talked to in the earliest days of our broadcast, including LinkedIn co-founder and Greylock Partners partner Reid Hoffman, Cowboy Ventures founder Aileen Lee, and Palo Alto Networks chair Nikesh Arora, who actually joined me on the very first edition of Bloomberg Tech on February 28th, 2011, when he was a top executive at Google. All of them will be with me here on a special 10 Years of Bloomberg Technology episode. I'm just going to try to get through the hour without crying. You do not want to miss it. All right. Meantime, crypto exchange Coinbase has applied to list its common stock on the NASDAQ under the ticker COIN. The announcement of the direct listing coming as it announces a doubling of net revenue for the year and to more than $1 billion. For more, I want to bring in Bloomberg's Crystal Z. So, Crystal, what exactly do we know about Coinbase's DL?
Yeah, they're opening books for the first time, so we had a first glimpse of what its financial is like. And to I guess most people's surprise, I mean, it's a company that has quite a lot of profit. They reported in 2020 like more than 300 million in profit and more than 1 billion in revenue, and maybe that's why they're picking this direct listing route. They will be listing on NASDAQ without raising any capital. So that is interesting to watch. And in the coming weeks, they will have an investor day, and from then on, there will be some reference price. Then, all the insiders can list their shares, and we can see that becoming a public company on the NASDAQ.
Now, we're looking at a potentially $100 billion valuation here, but I wonder how much does that market cap depend on the price of Bitcoin and the massive fluctuations that we've seen? Will the fluctuations we see in digital currency impact the ultimate market cap of Coinbase?
Yeah, so the 100 billion, first of all, is actually the private secondary trading value. That does not value the entire company. That is probably a very small portion of what the company is worth. So it's very likely that the market cap, when we see it become public, is not going to be 100. But whether Bitcoin's price is going to impact transaction is, after all, a service provider. So it depends on people transacting on cryptocurrency. As long as people keep transacting, whether it's like high or low, they will still generate revenue. But obviously, if it's hot, like Bitcoin prices are hot, more people get into it, it benefits their business. So I can see how, big crypto and Coinbase will have this argument that, it works both ways.
And do you think the negative commentary we've heard this week from Bill Gates, from Janet Yellen, could impact investors' outlook?
Yeah, I just don't think crypto is no longer something you talk about at dinner table. It's something that every institution has gotten into. Even Coinbase, they have services with accounts with institutions, and there has been very many comments from other institutions that actually have gotten into crypto lately, and that includes very big investment banks and very reputable investors.
Okay.
So yeah, it's interesting, but I don't think that comment is going to like shut down Bitcoin transactions altogether.
All right, Crystal Z, thanks so much. Of course, we will be charting that one all the way to the end. Coming up, Airbnb's first earnings report as a public company. I'll speak to CEO Brian Chesky. I'm also going to speak to Mark Benioff, Salesforce's CEO, about their report later in the show. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Airbnb shares are up over 13% after quarterly revenue beat estimates. The company, though, declined to give a financial forecast and is cautious about the year to come. I caught up with CEO Brian Chesky to get his perspective on Airbnb's growth strategy and what travel looks like as the world gradually comes out of lockdown.
Our model is inherently adaptable. So however travel changes, because we have millions of hosts in 100,000 cities and communities in nearly every corner of the world, however travel changes, we can adapt. And what we're seeing is people are staying longer. They're getting in cars, they're traveling nearby. And that's the kind of travel that people want with Airbnb. They're also telling us they miss travel, but the kind of travel people miss is not business travel. And it's not like standing in line to see a landmark. What they miss are spending time with family and friends, and staying in a home and being hosted is really a great way to do that. So I think that explains some of the recovery.
Digging into the numbers, revenue was down 22% for the quarter, 30% for the year, but your competitors down way more than that. Expedia down 57%, bookings down 55%. How much do you see that competitive edge continuing post-pandemic, especially given that now is a unique time when people might be favoring vacation rentals over hotels?
I can probably comment more on what's going to happen with Airbnb, but we know a few things to be true. The factors that were driving our recovery, we believe, will continue through the year. Again, business travel is probably not going to recover, but leisure travel will. We are a predominantly leisure travel business. People probably won't be crossing borders right away or going to big urban centers. They're probably going to be getting in cars and traveling to small communities nearby. That is really the concentration of Airbnb. Now, in a world of Zoom, people can work from home, and they're realizing they can work from any home. And so you're going to start to see more and more longer stays on Airbnb as well. So we think all the reasons why people loved Airbnb, those reasons will continue, in addition to new use cases that I think people keep discovering to use Airbnb from COVID and beyond.
Now, on the forecast, you say year-over-year comparisons are going to be volatile and unreliable. But give us some color on what you see in the year ahead. When do we see a real bounce back? Compare the first half to the second half or something.
Well, anyone that was in the business of predicting the future last year would have probably gone out of business. So I'm going to try to not predict too much about the future. We do believe the travel rebound is coming. The reason why is because people tell us, we did a travel survey of American travelers, and they said that travel is the out-of-home activity they miss the most. The majority of people we polled, including people that make median or below median income, do plan to travel this year, and they plan to travel when it's safe to do so. And what it's safe to do so is a subjective feeling that people will probably determine on a very personal basis. So here's what we know. We do believe a travel rebound is coming. We think it's going to be a very big rebound. We don't know exactly when, but I've told my team better to be early than late. So we want to assume the best case scenario that it comes back early, and we'll be ready as soon as it is.
So how is the company preparing for that demand increase?
Yeah, 4 things we're doing. The first thing is we've just done a really big, we launched this week a really big brand campaign called Made Possible by Host. We don't do a lot of marketing anymore. We haven't done a brand campaign in over 5 years, but we felt like now was the perfect time. People want a message of hope, but also we wanted to make an investment in the brand of hosting so that more people want to be host and more people want to stay with host. Next, we need to recruit more hosts. If the rebound is as big as people think it could be, we need to make sure we have enough hosts to prepare. Third, we want to simplify our app, and we're changing our product. We're changing the paradigm of how you book an Airbnb. We do those things, and I think we'll not only be ready for the travel rebound, but probably ready sooner than any other travel company.
Now, most of the growth is coming right now from North America, from regional travel, and less so in Europe, where we see stricter lockdowns. How do you see international travel returning? When does that bounce back?
So we're seeing a lot of strength in the United States, but also in other countries like Mexico and Brazil and other countries where domestic travel is vibrant. So the real question is, when does cross-border travel return? I mean, certainly I don't know the answer to that. Probably health officials will probably have a better sense, because people will cross borders when they feel safe to do so. And that probably has a lot more to do with the health crisis and vaccination rollouts.
Airbnb CEO Brian Chesky there. You can catch the full interview at Bloomberg.com. Meantime, Salesforce reporting a 20% increase in fourth quarter sales, the same year-over-year gains as the previous period. The numbers, though, disappointed investors who were looking for growth to accelerate, driving shares down more than 6%. I spoke to CEO Mark Benioff to hear why he says he's still confident about the company's forecast.
We're seeing a robust robust demand environment. That is, customers need to transform. They need to be able to work from anywhere, succeed from anywhere. They need to be able to sell from anywhere, service from anywhere. That's what we do. And it's been a great opportunity to help our customers be more successful than ever.
That said, shares are dropping after hours. Some investors may be hoping for growth to accelerate even more. It was a hard day for tech in the markets, though. What's your response to that?
I never look at the stock, honestly. I really am mostly focused on our customer success. Over 22 years as the CEO of Salesforce, Emily, I've learned one thing, which is the most important thing is our customers being successful and letting the rest take care of itself. That's my advice to other CEOs as well, which is nothing is more important than the success you have with your customers. And this was a year with a lot of customer success. I look at a couple of examples. One of them, a company that you and I follow really closely, Align Technologies here in the Bay Area, the ability for them to completely transform their relationship with their customers. It's a product that's more important than ever, because in the new world of Zoom. And as you know, I'm at home right now. Everyone wants to look great on Zoom and they all want to align. And so they have all new portals and full digital transformation, not only with the dentist and orthodontist, but even in the B2C relationships. And just an amazing CEO has fully transformed the digital experience. A great example.
I'm at home as well, Mark, so I feel you. Talk to us a little bit about what you've learned about leadership over the last year, having to run a company with all of these employees, not knowing what's ahead.
Well, I think that this is a moment where we have to cultivate our beginner's mind. You know, in a beginner's mind, we can have every possibility. In the expert's mind, there's few possibilities. And in the last year, I've learned, hey, the world of work, we need a beginner's mind. I'm not in my office. I'm at home. I need to be able to sell digitally. I need to be able to service digitally. I need to, you know, we are conducting billions of impressions with our customers on a regular basis as a company. I know we need to help our customers do that. You and I are usually doing an interview at Dreamforce every year in San Francisco. We did it from a park and it was just me and a camera. Well, you weren't there. And that's an example where we have to like get ready to recreate everything. But as we're moving into this new world, you know, as we're getting vaccinated and as things are starting to reopen, I think we're going to see things change. I was just in Singapore 2 weeks ago, Emily, and I went there to see how does the future work look like in the future? How does the future look like in the future? How does work look like in the future? And what I can tell you is that they're still wearing masks, but all of their businesses are open. Their hotels are open. They're conducting a normal society. And it was very powerful to see that and experience it and inspire me for what the future of, I think, what we're going to be going through here.
What's your sense so far from regulators about whether they'll approve the Slack deal?
Well, we've entered into an agreement to acquire Slack, and we have continued to just enter that process. And I expect that we'll have a successful outcome. And until that point, we will just continue our business normally.
Salesforce CEO Mark Benioff there. You can also catch that full interview at Bloomberg.com. Coming up, a deadly winter storm in Texas has some rethinking America's energy infrastructure and increased calls for renewable energy sources. We're going to talk about all that with Tom von Reichbauer of the solar provider Sunrun. That is next. This is Bloomberg. Renewable energy, once again, a national topic of conversation after a winter storm paralyzed the state of Texas, leaving millions to fend off the cold without power. But alternative energy companies like Sunrun say home solar systems and batteries can play a critical role in rebuilding a more resilient energy grid. Joining us now, Sunrun CFO Tom von Reichbauer on the heels of the company's fourth quarter results. So look, we have to start by talking about Texas and your reaction to not just what happened there, but the controversy that ensued about renewable energy or not. Some, including even the governor, blaming renewable energy for causing the problems in the first place. What's your reaction to that?
Yeah, Emily, you know, it's a really unfortunate event and one that we should actually expect more of if we don't take the opportunity to modernize and decarbonize our energy infrastructure. You know, Texas has an incredibly broad fuel source mix, and I think pointing to a specific source of fuel is really mispointing the direction here. There's a huge opportunity in front of us. You know, our customers in Texas with solar and energy storage systems were able to provide resilience, not only for themselves, but also for the grid at large. Customers saw thousands of hours of backup energy from their homes where they were able to power through while other folks were out of power. And then for every home that has their own sited generation and storage, you know, we alleviate stress on the grid overall. In addition, in other instances like this in California last year, we're able to dispatch surplus energy back to the grid to actually help alleviate the problem. And so I think, you know, taking the moment to update the infrastructure, provide more distributed resources as well versus these centralized systems that tend to fail is really critical. And then for consumers, we're able to provide them.
I wanted to ask about speaking of consumers, the Brightbox expansion in Texas and how many people that's been made available to and how that could help in another power failure.
Yeah, so in Texas, we had hundreds of customers with Brightbox energy storage solutions at their home. We've deployed more than 16,000 of them nationwide, and we've seen this in every major failure. When you see wildfires in California and storms in the Northeast, and most recently here in Texas, customers are able to have backup power on demand when they need it and make it through these types of events.
So let's talk then about, do you think that the controversy will set back the industry at all, given the discussion that ensued and the continued denial of climate change?
I really don't think so. I think, in fact, you see the trends accelerating on the heels of these events. In Texas, from consumers driving pull here, we saw a 350% increase in web traffic in the state after the events. Customers realized that their friends and family members who have solar and storage at their homes are getting a better service than what's been provided by the legacy utility operators. And so they're attracted to the reliability, they're attracted to clean energy, and they're attracted to the affordability of the solution, where we price at a discount relative to the incumbent utility. And so I think that consumer pull is positive. And then from a policy point of view, you see regulators pushing on this. It's been a meaningful creator of jobs locally and high-paying jobs at that. And so, there's a lot of demand, for more of these resources, both from consumers and from policymakers.
So just a minute left, Tom. You say the total addressable market for solar has only been tapped 3%. You plan to grow 20 to 25% next year. What's your plan of attack for potential customers? Are you prioritizing or targeting certain regions before others?
Yeah, so residential solar is only 3% penetrated today. We acquired one of our largest competitors last year in Vivint Solar, and that gives us, I think, the best omni-channel approach to the industry, where we're going to be ubiquitous, available online, door-to-door, in retail, through local channel partners, and that'll give us, more presence. We've got an incredible product offering with our solar lease and our energy storage solution, Brightbox, and that's going to position us very well here to grow in the year ahead.
All right. Well, we'll be watching. Tom von Reichbauer, CFO of Sunrun. Thank you so much, Tom, for stopping by. Still ahead, DraftKings out with fourth quarter revenue that beat estimates, another signal that sports betting isn't slowing down. We're going to hear from the CEO, Jason Robins, about his outlook for the industry and why he chose to go public via SPAC, despite being called crazy. That is next. This is Bloomberg. DraftKings shares have been on a tear and more than tripled since going public in April. The company reporting stronger than expected fourth quarter results, in part due to a growing number of states legalizing online sports betting. I spoke with CEO Jason Robins earlier to find out whether growth will keep up in 2021.
I think that the industry is still very nascent, very much in a growth phase. We feel like we have a tremendous amount of growth potential in the coming years ahead of us. I do think it'll be interesting to see, as hopefully things get back to normal, maybe in the back half of the year, there is some impact that we saw on the positive side of people staying at home, not spending as much of their entertainment budget on things like vacations and dining out. Some of that might swing the other way, but I think there's just such amazing momentum right now with these new states opening up, with just these early, states that we've launched, and still seeing things like triple-digit growth on the top line in New Jersey after 2.5 years. That I think we'll have a lot of continued growth in the coming years, no matter what happens.
How much did the disrupted sports calendar impact you? And then looking ahead, as you see things start to hopefully normalize, what does that mean?
It definitely has an impact when your product and content are based around sports and traditional sports are not being played. So we actually saw a decline year over year in Q2. The end of Q1 was really when things started. So we still had a pretty good first quarter last year, but Q2 really was just a complete reversal. And then when things started to come back in Q3, it went the other way. So over the course of the year, it had a little bit of an impact. I think it was mostly offset by a very packed sports calendar in the back half of the year, as well as some of that pent up demand that we saw in the stay-at-home nature of, the pandemic affecting our volumes. But there was probably some upside that would have been captured if there had been sports played through the whole thing. And I think that we'll probably have a really good year-over-year growth rate in Q2 this year.
Multiple states have now either legalized or introduced legislation legalizing online gambling. Do you expect that to keep up? And then how does that impact growth?
Well, we still do see tremendous growth in some of the states we've launched. I mentioned New Jersey, which is about 2.5 years in since legalizing online sports betting, is still growing at triple-digit pace on the top line. But the biggest aspect of both our growth and the long-term size of the market is going to be how many states decide to move forward with online sports betting and iGaming legislation. And we definitely see that continuing in terms of momentum right now. There's just under 20 states that have introduced some form of legislation to legalize sports betting. I think 4 that have introduced legislation to legalize iGaming. So it seems like the momentum is continuing as far as states considering legislation. Hopefully we'll get a bunch of those, we'll see a bunch of those get passed, but hard to predict exactly what the pace will be.
Now, everyone's stuck inside right now. Entertainment options are limited. What happens when people can get out again, go to restaurants, go to live in-person events? What does that mean for your product?
Well, I think in the same way it probably benefited us last year. I think if in the back half of the year you see what you just described, then that's something we have to be careful about. And we were cautious in providing guidance. We assumed that, there would be a return to normalcy, whatever that means, in the back half of the year, and that some of that, entertainment budget that maybe it shifted our way would shift back to things like going out to concerts, going on vacations, going out to dinner. So we were appropriately cautious, I think, in how we guided, thinking through that aspect. And I think if you're saying, if we were saying that we saw a positive benefit from it last year, it'd be pretty hard to say that when things start to shift back to normal that we won't see the opposite. So that's the view that we're taking.
You went public via SPAC last year, sort of before everybody was doing it. What do you think of the trend now? I just interviewed A-Rod, who's doing a SPAC. How does this play out?
Well, A-Rod's a very smart investor, so I'm sure he'll do a great job with his SPAC. But, it was interesting when we first were considering doing a SPAC, and we had good reason for it. It was, really the only way. We were acquiring a company called SB Tech, and you can't really acquire a company through an IPO process. You can do it before or after, but we thought a SPAC was a clever way to do it all at the same time. And people looked at me like I was crazy, like SPAC was a dirty word or something. And people said, why would you do a SPAC? Good companies don't do SPACs. And I was really close with the sponsor and founder, Harry Sloan. I trusted him. He's amazing in terms of the success he's had on the SPAC front, and he really understands the capital markets well. So, between it being the perfect vehicle to do the kind of transaction we're trying to do, my trust and faith in Harry, it really was something I felt comfortable with. And hopefully we become more of our legacy is what we do, besides maybe having a hand in starting the SPAC craze, and we have a lot to prove there. But, it's interesting to see how quickly it went from, like I said, a little over a year ago when people looked at me like I was crazy to now, virtually every company I talk to that's thinking about going public is at least considering a SPAC as an option.
Do you think we're in a SPAC bubble? I mean, there have been the critics, Charlie Munger, Warren Buffett's right hand, saying the world would be better off without SPACs. This is a bubble that's going to end badly. Those were his words.
I don't really understand how the world would be better off without SPACs, and I'm a bit biased, but we wouldn't have been able to do the transaction the way that we would have done it if there hadn't been SPACs. But I do think that there's probably a bit of an overabundance of them now. These things go through cycles, so I completely understand their views that there's maybe a little bit too much of that going on. When you see people that, really barely understand the structure of SPACs starting these things, then it's hard to imagine that there isn't a bit of an overheating aspect of what's going on. But these things normalize over time. And I think the flip side of that is, as I mentioned, when we did ours, everybody was like, are you crazy? Why are you doing that? So now there's a lot more companies that are actually considering it, and a lot more quality companies that are considering it. So both the supply side and the demand side have gone up, and hard to know where that all nets out. But certainly I think both are moving. So, tricky to say if there's too many or not, but it feels like it might be a little bit overheated.
DraftKings CEO Jason Robbins there, and that does it for this edition of Bloomberg Technology. Have a wonderful weekend, everyone, and do not forget, tune in Monday, a special celebration of 10 years of this program. We're going to feature some of our original guests, friends of the show, LinkedIn co-founder Reid Hoffman, Cowboy Ventures, Aileen Lee, Nikesh Arora, who was on the very first show a decade ago. We're going to be covering some of the major technological shifts over the last decade and what to look for in the decade to come. Wall Street Week is up next. I'm Emily Chang. This is Bloomberg.